Hello traders, here's something I don't talk about enough. I do talk about line chart levels, and the higher the time frame, the clearer the levels are. So this is a tiny trade here, really, just to prove a point to myself, really. In terms of tiny trade, I mean in terms of size of risk, pennies. So we can clearly see price pushed down, bounced off this demand level here, and this is my target area for this particular sell. Now, if I can explain myself, look at the let's zoom in a bit, move it across. If it will come across, bear with. Excuse me. Look at all these line chart lows, and you can clearly see price has broken through the lowest one. And if we look at the higher time frames, once again, this is the chosen level. We can clearly see price broke and closed through there with that momentum. So price now is below effectively price is below the last buyers. So it means they're broken. It means price should go down again. We know on the lower time frame this had actually closed through and tested this level here. You can see that. That is just incidental. That would normally be a warning sign that a level has been tested. But I'm not treating it like that with my thought processes. Those are old-fashioned, sort of off-the-cuff comments that I was taught. We're going back over 15, 16, 17, 18 years. I started open charts over 20 years ago, and found a mentor 2 years into that, 18 years ago. And that mentor said never trade up to a level that has been tested. Good advice at the time, because it effectively means, if this was an important level, it might have had stops behind it. They've taken the stops out and they've crashed it. That's that thought process. But in this instance, they actually haven't hit the lowest level, taken out stops, whatever. So my view is that this is now on its way down. In fact, the Bollingers are telling me it should be short as well. So I did mean to make a sort of flyby video about the Bollingers, reminding people that they're not a reason to trade. They're just another reason to confirm the real bare bones of this method, the 3CR, the breaks of the buyers, like this instance here by sellers, the momentum, and the potential. This is a world apart from just using indicators to take trades. It's using indicators to confirm trades, and Bollingers are ancient. Well, I say ancient, 20, 30, 40 years old. I have no idea about Mr. Bollinger when he came on board. But momentum is even older, and it all goes on. Chart patterns go back hundreds of years. So anyway, I'm digressing. This has been broken clearly by price here, and this is why I expect it to go down. We've actually got divergence as well. I mean, you can't unsee this stuff. Sorry, I've been messing around with trend lines, so I like white on that. I like it thicker, and I don't want the ray on it. So we've got the divergence going on. Can't quite see it properly on the TMA, but clearly see it on the RSI histo. High, making a lower high. So yeah, I'm expecting this to go down. I'll pause this, come back and see what's happened. Right, I'm back. That looked like a good call. Closed the partial on it and let the tiny little bit run. So what can I say? It does, 3CR strategies do what they say on the tin. Thanks for watching. Have a wonderful Friday evening and weekend here in the UK and all over the world. Thanks again.